Hi, I'm Nick Adrian, and welcome to this episode of Fate, Luck and Choice. We're changing our approach today, and we're interviewing Sim Tshabalala, the Group Chief Executive of Standard Bank. Welcome to you, Sim.
Thank you very much, Nick.
And welcome to my friend and colleague, Adrian. We look forward to a great conversation.
Thanks, Nick. Good to be with you. Sim, such a pleasure to have you in the studio and on the podcast with us. Let's get right into the heart of things. You sit at the head of the biggest bank in Africa. If we rewind 25 years, this wasn't the way it was planned because foreign banks came. They had a very big appetite, stepping onto the stage early 2000s, and it hasn't quite panned out that way. What did they misread? Why did they come and go? And what did you get right?
Adrian, thank you very much for this opportunity. And Nick, my hero and mentor, thank you for the privilege of having this conversation. Adrian, South Africa is a smallish but open economy with great national competitive advantages, and the most important one of which is a pretty large business sector, which is quite sophisticated and is globally connected and is connected to the African continent. At the time, the margins in the business of financial services were pretty wide and quite large, and the international saw an opportunity post-1994 to come and benefit from the developments that were happening on the South African business sector. However, they did find that the South African banks were not slouches. They had significant capital. They had massive installed capacity, distribution channels, great brands, and great competitive advantages, which they leveraged. Standard Bank, First Rand Bank, ABSA, all of them responded to this competition. This was great for clients because it improved services. As competition increases, service improves and clients benefit. Over time, they have left for various reasons, but what we're finding is that they're on their way back. I'm sure I can speak about this.
So if I could just interject there, would you say that the global Goliaths underestimated the South African Goliaths?
Yes, they underestimated the competitive advantages that these banks had, in a similar way that some of us have underestimated African banks outside South Africa.
Okay.
Yeah.
Okay. And so I interrupted you, but your sense is that there is a return
back.
of that tide.
They're back, particularly in
South Africa?
Both. So in the corporate space, as people are realizing that this actually is the African century, African Renaissance, to use the language President Thabo Mbeki used to use. Africa has got great demographics, fantastic resources that the world needs: manganese, cobalt, copper, platinum, metals, sun, wind, geothermal in East Africa. Great opportunity therefore for the world to take advantage of the resources that the continent has got. And they're seeing these opportunities, and they are facilitating the investments, the payments, and the infrastructure build out.
So that then makes, I suppose, the obvious point that if you behaving as a South African bank, also stepping into other markets, you see a similar opportunity. You now sit with a presence in 21 markets, Pan-Africa, including South Africa. At what point does Standard Bank flip from being? Where does the switch go? We're not a South African bank, we're an African bank.
So fate, what we find, the current stewards of Standard Bank, we find a network that was actually built in 1988. Because up until 1988, the Standard Bank was part of Standard Chartered. And three great Standard bankers, H.P. de Villiers, chairman, Dr. Strauss, managing director, Eddie Theron was the deputy, if I remember correctly. And when they leave, Standard Chartered leaves, and they sell out of South Africa, part of the disinvestment. If you recall, the townships were ablaze, the country was on the verge, and it was in the process of transition. Standard Chartered sells. Those three, the triumvirate, decide that Africa is our hinterland, and I quote Dr. Strauss here, that actually we're a large bank in a small economy. There are three ways of growth in a financial institution. It's market penetration, product penetration, and geographic expansion. We've got both in South Africa. Let's take on the third one, and let's buy a little trading house in Swaziland. 1992, they buy ANZ Grindleys, which has got 8 operations on the African continent. And management subsequent to that builds on that. And that is fate.
So that was part of the early development. And just speak a bit, if you can, about China and the investment in the bank and how you see China maybe at the moment, although we could come back to that if you want.
Yeah. Mid-2000s, it becomes pretty clear that the world is competing for African resources, and China is very focused on critical minerals and in having access to the arable land on the African continent and so forth. It also becomes pretty clear to us at the time that we need to be able to service all our clients, whether they be African clients, US clients, European clients, and indeed Chinese clients that have an interest in Africa. And the decision gets made at the time that the best way to do that is by partnering with a bank that is based in China, and this bank is then ICBC. ICBC buys 20%, they inject capital into the bank. At the time, remember, we were teetering, the world was teetering, it was the global financial crisis. We actually were fortunate to have the liquidity and the capital provided by this bank. What does this do for Standard Bank? Not only is Standard Bank now the largest bank in Africa, it's in partnership with the largest bank in the world, the ICBC, occupying then the channel between China and Africa. China is the largest trading partner to the African continent. About 30% of African trade is with China. It makes sense, therefore, for us to service our clients on both sides, importers and exporters, people making investments, building bridges, ports, and railways that Africa actually does need. And that relationship has been fantastic from that perspective, providing us with capital, relationships with large corporates. A number of Fortune 500 Chinese companies are our clients. So it's been great. It's been absolutely fantastic.
I want to return to a discussion about South Africa, but on the way, you in talking about ICBC, you raised the issue, of Chinese interest. If we could reverse that, that recently, with the goings on global stage, China says African exporters have open access to the Chinese market. Too soon? Do you think that that's just a card or a gesture, or do you anticipate that that will really translate into African manufacturers producing export for Chinese buyers?
So what we know for a fact, Adrian, is that excess capacity in China is now being deployed into the African continent, some of it manufacturing capacity. And one of the outcomes of that is firstly the building of manufacturing capacity on the continent, take motor manufacturers, but also the export of cheap goods into Africa. That's got two effects, one bad, one good. The one bad one is that unless Africans themselves respond by building manufacturing capacity, this has the effect of decimating swathes of industries. Think in South Africa, the textile sector, the manufacturing sector potentially, unless South Africa plays its cards right. So that's the negative. The positive is that it has the effect of depressing inflation. Think of the second-hand car market versus the new vehicles, the new Chinese vehicles that South Africans are able to buy. And so what then you have to think about is how you position not only South Africa, but the African continent and businesses in South Africa and Africa to take advantage of this global competition. I like quoting Kwame Nkrumah, who said, we face neither east nor west, we face forward. In other words, we've got to do what's in the best interest of Africa. Negotiate the best bargains for Africa. People expect us to do that. And what often happens is we often end up in transactional arrangements that are actually not in the best interest of Africans. I'm making the case for saying we've got massive resources that the world needs for its transition. Whether it's the East or the West, we must negotiate the best bargains. If people are going to build a bridge or a port or an airport or a dam, it better be done in a way that is in the best interest, that there be as little as possible of rent-seeking or unproductive rent-seeking, if there is any. Make sure that the money gets to the small to medium enterprises that are local. Make sure that then you end up with a bridge or a port that functions properly, manufactured on the continent by Africans themselves. And there are examples where Africans have done that, where they've insisted that you've got to localize, you can't bring Chinese employees here. Or if you're going to have American engineering companies, fantastic, we would like to have them because they're more competitive than anybody else, et cetera, et cetera, et cetera.
You mentioned China at a certain point, and I'm sure we'll move on from China now, but it was a time when they wanted natural resources, and you talked about arable land. Has that
Arable
phase?
land and critical minerals.
Minerals, yep.
Lithium,
The natural,
cobalt, copper,
yep.
manganese.
But
yeah.
so you see that as a future interest, not a declining interest.
I see it as a burgeoning interest, and it's not just by the Chinese,
Right.
it's by the
By others
EU
as well.
and by the Americans, the Indians, the Saudi Arabians. The largest trading partner now, which has now exceeded the US, but I think has not exceeded the Chinese, is the Gulf states. What do they
Become
want?
very active.
Yeah. They too are interested in African resources.
Yeah.
My point, Adrian, is that it's a great moment for Africa to negotiate bargains for itself, rather than be a recipient of
Your
others'
sense being that
largesse.
we've got greater strength than has historically been the
We've got
case.
chips to play in the
Yeah.
negotiation process, in the game, yeah.
My exacting A-type won't let this question go until I've got an approximate date. At some point in this story, Standard Bank becomes African, not South African. Is there a year? Even an approximate
Lord.
year. I'm curious.
No, I'm going to challenge the premise of your question.
Okay.
Standard Bank has always been African, even
Right.
prior to 1988, because it was part of Standard Charter. Standard
Love
Bank
it.
was founded in
Got it, yeah.
in October 1862 in the
Okay.
town of Gqeberha. And the founder was John Patterson, who owns the Grocart and the Herald, just as a matter of interest, the great newspapers. And the bank gets founded to service wool traders.
Right.
And from that moment onwards, it grows outside South Africa. It grows into Zimbabwe, into Bechuanaland, as it was called then, and it becomes an African institution. In 1988, Standard Chartered sells, and Tehran and that triumvirate decide to go into Africa. So my thesis is that it's always been African.
They
Got it.
waves.
Does that make sense? They're
Yeah,
just,
different waves.
just different, yeah.
I'll
And what I'm resisting,
rest.
yeah, what I'm
There's a
resisting
date.
also is the notion of South African exceptionalism. That South Africa, we often fall into this trap at the bank as well. We say, South Africa and Africa. What on earth are you talking about? South Africa is quintessentially African
Yes.
in that sense.
I mean, it's,
And in fact, I'm proud of this as well. And I'll stop. You've got a very talkative interviewee today.
good.
In Nigeria, people don't say we're a South African bank. They say Stanbic IBTC, our own bank. Likewise in Ghana, Malawi,
Kenya.
Mozambique, because we have managed to portray ourselves in words, action, and in content, the content of what we do as an African institution.
If we, against that backdrop now,
Yeah.
And not to sort of try and double down on this, but you have a granular lens that allows you to sense check what's going on in South Africa.
Yeah.
So I do want to talk about South Africa specifically.
Yeah.
We've been through a sequence of dramas in recent times with the rest of the world. COVID, sluggish economic growth, state capture, load shedding. We have a sense that South Africa is recovering from that. We hosted on Fate, Luck and Choice Busi Mavuso, who it gave us a fantastic sense check of that. Spoke about the recovery in network industry, most importantly electricity. Early evidence that logistics is joining in on that recovery. What's your reading of the lay of the land under a government of national unity, with global shenanigans, a rand that's sort of got stronger but is a little bit hesitant, economic growth that threatens to get stronger but doesn't quite get there? What's the sense we get by looking through your lending book?
The April private sector credit extension was just above 8% year on year as at April. So it was 8%. Of that 8%, the fastest growing portion was to corporates. It was in double digits. I think it was around 12%. And that's been the case for the last few months. So what is happening? We have successfully reformed the electricity sector as a country. We haven't had load shedding for the longest time. Our energy availability factor continues to improve. Exactly your point. Secondly, the logistics sector has improved. Freight rail has improved. The ports are functioning. The telecom sector are rolling out their 5G. In the townships where my parents used to live, there is fiber. The visa regime has improved. The water sector, authorities have turned their attention to the water sector. So I feel, like everybody else, that the steps necessary to get us to growth above 2.3% by 2030, those actions are now in place. So our economists project that we'll grow at 1.3% this year, 2.3% in 2030, but that's not good enough. Business thinks that it can be faster, and we think that it can be above that 2.3% if and only if Operation Vulindlela 1 and Operation Vulindlela 2 are successfully executed. One piece of very interesting data is the IMF has just issued its Article 4 report. They did that in February. And one of the fundamental points they make is that if you get governance right, you get governance right, we grow at 3%. Output goes up by 9%. You get the labor regime right, you improve jobs by over 1.5%. And so what does that tell us, Nick and Adrian? It says that if South Africa gets its rule of law and governance right, GDP goes faster. There's a direct correlation between the rule of law and GDP. So if we do all of that, we get the infrastructure right, we get the laws and regulations properly implemented, we get a capable state, the country grows at above 3%.
It takes me back to a discussion we had a long time ago about layers of risk. So the first risk for you is how well you run the bank with your team. The second risk is how you compete in the sector. But the third risk, which we all know about, is the country risk and the challenges related to these things you've just mentioned. Would you say that Vulindlela and the relationship, about which people don't know that much in the public mind, has been a big success?
It has been a resounding success. And in fact, let me point you to another data point exactly along the lines that you're arguing. We've just had 3 of the ratings agencies upgrade us. It didn't happen by the grace of God. It happened because the steps being taken to implement these things are successful.
That's design and intent.
It's design and intent. Our debt to GDP ratio will improve. It's not people sucking their thumbs. These things are actually happening. Fiscal rectitude is there. Our institutions are functioning. The National Treasury, the Reserve Bank, Department of Science and Technology, and so forth. But we need to address the rule of law.
So what we see around the world is in relatively new political systems, South Africa, 30 years of democracy, it takes time to really come together and build the institutional relationships between the state and business, between business, civil society, etc. And often we over-respond to short-term things.
Yes.
Whereas what you're describing are structural. They're not so visible to the average citizen or voter, but they are platforms that you think...
And you have to take a long view.
Take a long view.
Yeah. So one of the things you have to do as a business person or a banker is try to understand what the natural laws are. You don't have to be a politician. And in fact, you shouldn't be to operate properly in a financial institution. But one fundamental fact that is often lost on people is that even though the situation in South Africa seems turbulent, it's actually following the natural laws of countries that have been run by liberation movements as they normalize. And the best functioning ones are where you end up with coalitions that represent society appropriately.
Right.
And that is what we've got, whether you like it or not.
So
you take Mauritius or Botswana, etc. Countries like
they're
those.
Good examples.
They're good examples. Yeah.
And in Southeast Asia, you see many of the similar.
Exactly right. Yeah.
Would you then have to put quite a bit of your time, your top team's time, and the organization's resources into understanding these dynamics and trying to engage with government?
Yes, we do. We have a team inside the bank that spends a lot of time looking at what is happening in the geopolitical environment and what is happening in the macroeconomic environment in South Africa. They provide advice to ourselves as a bank, but they also provide advice to our clients. We do that from a risk management perspective, and we do it from a competitive perspective, because you've got to understand what are the forces causing your profitability.
Right.
You can't just blindly run your business. But it doesn't mean that you're a politician. It just means that you spend your time understanding.
You have a stake in public life.
Yes.
That's really important.
Put differently, the most important part of my job and my management team's job is to manage the cost of capital, the return on equity, and an important input thereon is country risk.
Yeah.
And country risk is an important element of the cost of capital. It's the first input. And therefore, it is in our interest to engage, to understand what's going on, and to influence.
If you look back on your time as CEO, what would be one of the best moments you've had and one of the toughest that you've had to deal with?
One of the toughest actually happened when I was supposed to be interviewed by you guys in early March, when we had a data breach. That was
Interview zero.
Interview zero, yeah. Bad luck. It was a profoundly difficult couple of weeks. We think that we have successfully resolved...
Can I just ask you,
sir.
Sim, just to say one sentence on for people who are listening to the podcast who may
What
not
happened?
know what went down?
So if they were Standard Bank clients, they would. So they'd better become Standard Bank clients. Just a bit of advertorial
Everyone
there.
gets a free advert.
Yeah, what basically happened was that we had cyber criminals who managed to enter our systems and stole data, but fortunately were able to stop them. They were not able to enter the operating systems, in other words, the payment systems and so forth, but they managed to get data, which then triggered legal and contractual obligations on our part, informing our clients, making sure that they were out of the system, staying close with the regulatory authorities, and then making sure that the risk was appropriately managed. And that period was a very difficult period. Many other organizations have been through similar. One only has to read the newspaper to see whether it's global operators or indeed small companies. Everybody is being subjected to these data thefts.
So that's your toughest patch.
It was really hard. The other one, of course, was COVID. Managing through COVID was a profoundly humbling experience, because Adrian, we're dealing with matters of life and death. Making decisions about vaccines and so forth, really, really difficult.
I don't want to lose next question about the highlight, the bright moment, but just while you're talking about data risk, systems that need to be in place to look after
protect clients,
operational integrity, etc. With a presence in 21 countries, what do you centralize? What do you decentralize?
My word, it's really difficult, but at the highest level, you centralize standards and policy setting, you decentralize execution.
Okay. And systems?
Systems are very, very difficult to centralize. Most countries are very sovereign in their thinking around data and
so
processing.
They have their idiosyncrasies.
They want And so you have to navigate between those things that you can centralize, whether it be hardware or software, policy making, and those things that you have to decentralize.
And their regulatory environment.
Their regulatory obligations, and we subsidiarized. You know, each of our banks is a separate legal entity. It's not a branch. So if we had a branch and we could operate on a branch basis, everything could be centralized.
The group, as it sits today, under your leadership, would you regard it as more centralized than when you took over, about the same, or less, from a Goldilocks perspective?
Neither hot, nor neither too hot, nor too cold. Adrian, I would say it goes in pendulums. There was a time when we were very centralized, from a management and decision-making point of view. We then decentralized and became very federated. I feel we're now sort of in a nice equilibrium, in that we're a business unit-led organization. So our strategy setting is set by client needs and therefore the business units. But you have to pay homage and be very respectful of the geographic legal entities, because, as I said, we're subsidiarized. They've got independent boards. You have to respect those boards. But those boards have to accept that they're part of a network, and you have to negotiate that with them respectfully, including with their regulators. So it's somewhere in the middle. If I could describe it as that.
I've still got Nick's question, but a last one on sort of systems and structure. You've made the observation that purpose decays exponentially through a large organization, and presumably we could extend that to geographically, that as you expand geographically, purpose is at risk of decaying. How do you hold this together, that a bank teller in Luanda is able to not just recite sort of, and utter the words, but subscribe to, buy in to the purpose of the group?
Importantly, so you heard me talk about the history of the group. I think the first thing you start with is by having reverence for who the organization is. The inscription at the Oracle of Delphi, and know thyself, applies equally to financial institutions and to business. You actually have to know yourself. Why? Well, you got to know yourself in order to be yourself. That applies to an individual as much as it applies to a business. So you got to know your history and your DNA. And then when you attract people into the organization, you got to try and attract people that are consistent with that history and DNA, its values, and therefore its purpose, and its strategy. And after all, actually, the strategy needs to have the culture as its flip side, how we do things around here. And that too is based on where do you come from, who are you, what are your values, what do you stand for. And we talk about that all the time. And then most importantly, talk is cheap, money buys the whiskey. When rewarding people, you've got to reward them on the basis of strategy, execution, and culture too. So when you devise your performance agreements, you devise them to give rise to strategic and financial outcomes, and also to non-financial value drivers, which include behavior, values, and so forth. And importantly, talk about it all the time. If I think about every speech I make, including this conversation, it's about purpose. What's the purpose of Standard Bank? Africa is our home, we drive our growth. What does that mean? Well, it means contributing to society's socio-economic development. That's what it means at Standard Bank. It means we need to serve our clients as we meet their intermediation needs, but do so in the context of the African continent. And lastly, that's one of the reasons, for example, after being severely criticized, we continue to finance the East Africa crude oil pipeline, because it's in the best interest of the people of Africa that they use their resources to uplift themselves. And that's what people are doing in East Africa.
So I'm going to keep my question still for another minute and build on that.
Yes.
To ask you, you've had a few people at senior level leave the bank recently, which in one way is a great compliment, because you obviously have some extraordinary executives, leaders in the bank. But you've put a huge amount of effort, along with purpose, in talent and building the capacity of the bank. Do you want to speak a bit about that?
Yeah, Nick, GIBS would know. We send waves of people at different levels of the organization to GIBS. We support people at other universities. I won't mention them in this august forum, but we send people all over, including all over the world, for advanced management programs, for short stints. I myself had the privilege of being sent to Harvard to do an AMP. So we invest heavily. We were talking earlier on about our Global Leadership Center in Sandton. Waves of people come through it. Part of a program that has been carefully thought through. To answer partly your question, Adrian, that is, how do you make sure that every single person in the organization understands the purpose and believes in it? That includes then the training programs they send through. It includes the stuff that we do digitally. We put people through digital programs as well. And all of that is calculated to make sure that there is this alignment right through the organization.
Fantastic. Can I
So when people do leave, sorry,
Yeah.
I have to address that because
Yes.
it's salient. I would invite you to look at the top 40 companies in South Africa, and you would not be surprised to see how many standard bankers are in the executive committees of those companies. It's just one of the things that happens when you make those investments. People come up through the ranks, they get opportunities elsewhere, and you have to wish them well. It's not necessarily a pleasant thing, but if people
Fact of life.
if people go and they go do great things elsewhere, we celebrate that, including when they go to our competitors. We respect our competitors, but banking is a contact sport. You tackle one another on the field, but you remain respectful. And
I think that's quotable.
It's a nice quote. And
is
you have a
true.
whiskey after the game.
You have a whiskey after
You were
the
going to
game.
ask another question.
I was just going to say, on that point, about sort of global landscape, if my social media has it right, you were speaking with Jamie Dimon recently
Yes.
on a stage.
Yeah.
What does global capital misunderstand or misperceive about the African circumstance? Africa is not a place. I'm not making that
54
point.
countries.
But there is a misconception.
So there is definitely a Africa perception risk premium. So in simple terms, as I try and get myself to understand it, is that people do not fully understand the risks associated with Africa, and they therefore just add on the cost of capital when analyzing Africa.
So many 100 basis points.
Yes. And that happens as a combination of, in some instances, people doing it consciously, and in some cases, and I've said this to many people that I've had this debate with, as a consequence of what one may call the inarticulate ideological premise. They make assumptions about Africa that are false. And often, people who are analyzing Africa are sitting in verdant offices in New York, London, even Dubai, and make those decisions without actually being in country. So we've been saying to ratings agencies, for example, you actually have to be represented on the continent. And thankfully they have. I mean, Moody's have got a subsidiary that is now operating on the continent. S&P has now got a larger group of people sitting here. And then large banks have got people represented, representing them on the continent. So there is a process that is happening where the world, I think, is starting to understand Africa better. But Adrian, the proposition is we end up paying more for our capital because people misperceive the risk.
Correct.
And it's a combination of, frankly, in some cases, just not understanding because they don't have the facts, and in others, it's just prejudice.
And because there's this historical frame, bad stories have a multiplying effect, and good stories don't get out there enough.
Yeah.
I
So
suppose
if you
would be
Google
your-
Ethiopia, the first thing you're going to read about
Yeah.
is famine,
Exactly.
but you won't hear
you
about
won't hear the prosperous underbelly of
what they've done with Ethiopian Airlines.
exactly,
the
and small businesses and
light
farming.
manufacturing.
Exactly.
Internal combustion engines are banned, and they're driving EVs.
Yeah.
You
So
have to
I'm going to
search for that.
swing back to my question.
Yes.
What was one of your best moments in your term?
Phew, there have been so many. when we met all our targets for 2025, return on equity, headline earnings per share, cost to income ratio, it was a sweet moment.
All the blue ticks lined up.
Yeah.
Lovely.
Yeah.
Fantastic.
If we could now, let's stay with Sim, and we go in your journey. It goes Klabisa, Sacred Heart.
No. Actually, it goes Klabisa. I was born in Klabisa.
Yeah.
Then I went to live with my maternal grandparents in northeastern Cape, a town called Burgersdorp, Epistolo in Fordien.
Okay.
And then went to live with my mom and dad in Soweto.
Soweto.
Yeah.
Sacred Heart, Grahamstown,
Yes.
Notre Dame.
Yeah.
You can't say
Harvard.
Grahamstown.
Oh,
Again.
You have to say
apologies.
Rhodes. No, you have to say
Rhodes.
Rhodes.
The university.
Exactly.
Where you study law.
Yeah.
You drop in Harvard at some point. Which part of this is, to stay with the thematic of this podcast, which part is fate, which part is luck, and where are the choices and the difficult decisions in this?
Quickly. Fate, yes, being born in one of the poorest parts of the country, Tlabisa, at the hospital there. I mean, I come to close to tears when I think about it and think about my family circumstances. Burgersdorp, also fate. My grandparents were teachers. My grandfather was the principal at the school in the township. My grandmother was a teacher, and he was a deacon in the Anglican church.
You've got to tell us what subject, just for curiosity.
I actually should find out. I actually don't know. I'll ask my mom.
Okay.
Yeah, I'll ask my mom what my grandmother's what she taught. I then, so all of that I think is fate. Being a black guy in South Africa, is fundamental to fate. Luck. Parents who. My mother was a nurse, and so education was an important part then of this family. So grandparents were teachers, mom a nurse. Love Charlotte Maclege. My office faces west, and so when I look south, I see that great hospital. And I also come close to tears when I think about what's going on there, but that's a debate for another day. Luck. These parents love education, and they sacrifice, and they send me to Sacred Heart College. Luck, my dad is a hustler. He's an entrepreneur. He builds a small business, makes some money, and he's able to send his kids to this great school, Sacred Heart College.
The struggle school.
Struggle school. Brother Neil McGurk teaches me about St. Thomas Aquinas. He doesn't teach me, but he says lots of things that get you to go and read. What is Neil talking about? I mean, fantastic stuff. Luck. I get a call one winter's morning from Adrian Vardy, who had been a partner at Bowman's, knew I hated law, and says, "Hey, Sim, I'm not sure what you're doing with your career, but don't you want to come and join us at Eurolink?" I joined Eurolink, and I learned the gentle art of structured finance. Luck.
So the lawyer becomes a corporate financier.
That's it. Luck. I have a fallout with people at Eurolink. I joined Standard Bank in 2000. Luck. The authorities decide not to allow the Netcore bid, and I join Standard Bank. Luck, I'm part of the team Jaco Marie assembles. Luck, I'm at the right place at the right time all through all of that. Choice, I apply myself. You will know that I didn't do a BCom. Shame on you. I majored in philosophy. I did anthropology, Afrikaans, Netherlands, all of those things.
Fabulous combination.
Superb.
Yeah. But what did it do for me? Everything I've learned about finance, well, not everything, but I've self-taught.
You've
Had to
raised
go and
yourself to understand.
Like an income statement. Shucks, even to this day, sometimes I make mistakes. It's like, what was that income? Is it a balance sheet item, etc.? But all of that stuff, economics, all of that self-taught. And that's the beauty of learning to read. So philosophy, learning to wonder, to worry and to wonder.
Lovely. Sim, it's been a fabulous conversation. You've still got a long way to go.
Yeah.
You're still at the crease, and you've got a lot of work ahead of you.
Yeah.
But we're really grateful you've come and shared this time with us.
We've got 1 minute.
and
Nick, can we ask the question about the letter that Sim leaves for?
Yes, that's what I was going to come to and say. So
I love the two of you.
one of the stories.
It's difficult sometimes.
I can imagine.
Only when he's not listening. One of the stories that goes around is about when a CEO hands over.
Yeah.
He gives he leaves 3 envelopes for his successor. And one he says to the guy or the person, when you have a crisis, open one of these. So he does. The new CEO opens it, and it says, blame your predecessor. So he does for what goes wrong. And then time goes by, and a second envelope comes, and it says, he opens it, and it says, call in the consultants and let them try and solve it. And time goes by, there's a third crisis. He opens up the envelope, very excited to see what he's told to do, and it says, prepare 3 envelopes. So it's a lovely story about handing over. And, you know, you walk away from years in this very high-pressured role, and we really wish you well with that. But what would be the message that you might leave the person who takes over? What would be the one thing you would say, hold this very tightly, because it really matters?
But that's exactly what my letter would say. Actually, jokes aside, it would say, Dear X, you have the privilege of being a steward in an important institution in South Africa, the African continent, and the world. You'd better not stuff it up.
Okay. Would you like to do that in slightly more Jesuit language, or is that how you would do it? Sim, it's been a pleasure spending time with you.
Absolutely.
Thanks so much for giving your time to both of us and Fate, Luck and Choice.
Thank you very much.
And
I
we wish you
enjoyed
lots
this.
of happy choice in the years ahead.
Lovely. Thank you so much, gents. Thank you.
Thanks, Sim.
And to all of the viewers, please subscribe, encourage your friends to join in, and join us for the next session of Fate, Luck and Choice.